Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Senior Technical Analyst with Market Rebellion. And we had one interesting close today on this Friday, the 27th. And if you look at the cues right here, you'll see that we have indeed traded over this trend line. This diagonal line right here represents the longer term trend line. And while many investors might believe that this is the big breakout that everyone's been looking for, and we're right back into a bull market, I must caution all of you because this is a danger zone. This is many times we'll have traders that will come in, buy, and then all of a sudden it drops right back down below that trend line. And that whole pattern there is labeled as a bull trap. Go on Google Images and search what a bull trap looks like on a technical chart. So you have to be very, very careful. Now, with that said, take out your trading checklist, and I'm going to talk more about that trading checklist towards the end of this video. Take out your trading checklist and analyze the candles. We do have a green candle there on slightly higher volume. But if you take a look down at those volume bars, we have a long stretch of green. We have 6 green candles in a row, which is known as a stale green light. And while we have that long stretch of green, look down at the oscillators, we have a negative divergence on the stochastic, and we have a negative divergence on the CCI. What does that mean? Well, when we have lower highs on the CCI or lower highs on the stochastic after following higher price highs, that is a significant signal that tells us the buyers may not be as motivated as we think. So for next week, because of that oh so slight candle there at the bottom with that increase in volume, I'm going to suggest that we could see just a tad higher on Monday. I'm going to go up with a two-part forecast on this. I think that the Qs could go up to 298.12, and then I think we're going to do an about face as we make an attempt to pull back to this trend line and possibly fill the gap down here. So we got a lot going on. It's a very small gap on the Qs that you have to pay very close attention to. Now, if we look at IWM, this is the Russell 2000. Again, we have conflicting signals where we have closed with a bullish engulfing candle on slightly higher volume. The close today, especially on DIA, we had a major sell-off towards the end of the day, which tells us that the longs, the short-term longs that is, were getting out. There, again, are conflicting signals because we just have a very, very slight close over that resistance area right here. And if I take a step back on this chart, you're going to see that we have another resistance area stacked up pretty close to where we are right now on today's highs. So with that said, I do believe that we're going to go just a little bit higher because of the bullish engulfing. And then again, like we saw in the Qs, right back down, just like that. So upside target, IWM is 191.13, and then the downside pullback is 189.22, 189.22. Now, if we look at SPY, this is the S&P 500 ETF, very, very different story. You can see that we have a shooting star here, which is a bearish candle on much lower volume after this long stretch of green known as that stale green light. At the end of this video, I'm going to play you a 1-minute video that's going to explain more about what we're doing here regarding my trading checklist, and you'll have access to that through Market Rebellion, so stand by right at the very end there. So what's my forecast? I do not think we're going to go much higher on SPY. In fact, I think we're going to come down right at the beginning of the week and possibly pull back to this role reversal support level now. Again, short-term support right around $400.90. Again, look down below. Negative divergence there on that CCI. Negative divergence on the stochastic after we see higher highs coming in this week. All right. So in addition to that, we had that wide divergence from the price and the moving average. What I mean by that is that the stock does not like to stay that far above the moving average. And you can see in the past, whenever we've gotten that far above that moving average, we tend to pull back to it. That's the snapback that I refer to in the rubber band effect. So that's my target for SPY. If we take a look at the diamonds, again, we had that big sell-off towards the end of the day. You'll see right here from my intraday chart on the daily candles. Look at that. In the last hour or so, we had a big sell-off on very high volume. Look down below. See this volume increase right up until the close? So that is bearish for the short term. And so I do believe that the diamonds are going to pull back. We've hit all my targets, by the way, on all the major markets. And we hit the downside target on the VIX, which I'll get to here in a little bit. But 100% hit rate from last week's report. And so the diamonds, I believe, we're going to pull right back to that moving average. So my downside target is 336.37. And then we'll have to see where we go from there. Again, we have 6 green candles in a row downstairs here in the volume read with a decrease in volume on the way up. Now, if we take a look at the VIX, this is the volatility index. Very interesting. We got this long stretch of red. That's a stale red light with 6 red candles in a row. Again, we hit my downside target on the VIX right there at 1902, came right to this major support level right down there around 1799 or 18. I'll round up on that one. Next week, I think the VIX is moving right back up to that moving average. Upside target on the VIX is $20.05. Again, a bullish VIX is bearish for the S&P. And so keep your stops in place if you are long. Our option traders had a good week this week where we pulled a bunch of cash out from our put spreads by rolling those to be a little bit less bearish. And in taking in that cash, we were able to lower the cost basis across the board in IWM and on the QQQs. I don't want to give too much away for the members here because they pay for that subscription. But if you stay in tune with Market Rebellion, you'll know my strategy for trading is very relaxed. I look at things a little bit differently than the shorter term traders. And so keep your eye on the charts and make sure you're managing risk. Now, from the geopolitical forefront, I want to show you some headlines that came out this week. I keep talking about the end of the petrodollar, right? And the move towards a global currency, particularly a central bank digital currency. Read up on this. You can see that the Saudi finance minister here is also talking about digital currencies and how they will become a big part in the way we do business internationally. And so that could put more pressure on the fiat currencies, especially the dollar. Now, I talked about this a while back, but this really puts things in perspective here, where the central banks continue to accumulate gold. It is believed that the central banks are preparing for an unprecedented period of monetary devastation. That's the words being used by the reporters that report on this on a regular basis. This is a significant divergence between the purchases of physical gold and what's happening with the Treasury Reserve holdings. We see that divergence happening right before our eyes month after month. Now, this is a political statement that I do believe will affect the general markets. It does not matter what political flag you fly. I think we all see the pressure on the White House. We have Biden's chief of staff resigning here, and the pressure about these documents being exposed, these classified documents are going to continue to put pressure on Biden. Here's a forecast. I do believe that Joe Biden will resign. I can't put a timeline on that, but as the pressure continues to increase, I think the Democrats themselves are going to turn and throw Biden under the bus, and that could leave us with Kamala Harris in the White House. This is something that I don't really know how the investors are going to digest, but I can't believe that that's going to be very bullish long term, because as it is, Kamala Harris doesn't get too much respect on the international front. And with the war continuing to mount in Ukraine, this could get very serious. You can see here that just this week, the German foreign minister declared war on Russia. If you look at some of the video coming out of Russia, they did not take this very well. And in fact, this is escalating quite rapidly, because after the U.S. has already committed to sending tanks, what happens? Ukraine is setting their sights on fighter jets right now. And these F-16s aren't cheap. For those of you that are in the military, you know that comes with a big price tag. So they ask for the tanks, get the commitment, ask for the jets. We'll see what happens. But this war is absolutely escalating, and that is something that is very serious that I do believe investors will have to deal with down the road. Again, it's one of my reasons why I tell people to keep your periscope up. Look at what's happening around the world. Make sure you're trading with stops and good risk management principles and keeping your eye on the charts. Now, with regard to inflation, I don't know how many of you are tracking this, but the PCE index came out, maybe suggesting that inflation is toning itself down a bit. But if you look at the price of gas, the price of regular gas in the past month has gone up 12.5%. You can see this. This comes from the AAA national gas prices. They post this dynamically each day, and you can see that the price of gas is going up. Now, the CPI, the core inflation numbers, the PCE, they do not measure fuel and food, and for good reason. They don't want the Americans to know, they don't want the consumers to know that inflation is still on the rise. And again, what I refer to here with the PCE and some of the inflationary figures that came out, you could see that the numbers are dropping here over the past month or so. But at the same time, while it looks as though inflation is starting to calm down a bit, the wages are also going down relative to inflation. So if we have close to 7% inflation and prices or wages are only going up by maybe 4.5%, we still have less buying power by the overall consumer, which is continuing to put pressures on families that are trying to make ends meet. This is the biggest picture right here that you can look at, and the most important as far as I'm concerned. This is what really drives inflation in our economy, food and energy, and this is why they exclude it from the core inflationary numbers. Look at what's happening to food, housing, water, gas, utilities, and transportation going through the roof. And there is no sign of a hinge or a pivot point forming right here. So again, keep your eyes on the data, keep your eyes on the big picture, keep your stops in place, and stay tuned for more as I continue to report back to you 2 times a week. I will be putting out the midweek report. This past Wednesday, at the time, it looked like we might get a little bit of a pullback towards the end of the week. I think that's now going to happen next week. I'm just pushing that back a little bit. As we saw at the close today, there was some pressure, especially in the Dow Jones Industrial Average. Now, like I said before, we have a very short video at the end of this presentation here that'll guide you to where you can find the trading checklist. It's my 7 points for trading that I've followed for almost 40 years, and I'm passing that on to the general public. Our members use this. I talk about it regularly. It's something that I teach through repetition, and I absolutely believe that you're going to find some value here. So again, keep your eyes on the charts. Stay tuned to Market Rebellion. Thank you so much for liking and sharing and commenting. That really helps drive the channel, and I do appreciate that. We are growing in numbers. The interest and subscribers are picking up, and that's all thanks to you. So have a great weekend, and we'll talk to you next time. Bye-bye. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here, and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.